Our guest today on the show, an old-timer from Dalal Street, Ashwini Agarwal, partner of Ashmore Investments. Ashwini, it's great to see you again, and it's been such a remarkable market in many ways. I mean, it gives you this feeling periodically that a big correction is finally beginning to start, but it just takes a few knocks and it's never more than a 5% dip, and it just continues to move ahead. Do you think we can roll on like this for much longer, just consolidate periodically and move higher and higher? Or do you think one of these corrections will turn out to be the real one?
So, Udayan, good to see you again. Great question. I was just tabulating. It's the longest increase or uprise in the market or a rising trend in the market without a meaningful correction. It's almost 18 months old. From the lows that we saw in March 2020, we saw, a correction, whether you can call it meaningful or not is debatable, but we saw a correction, let's say from the 30th of April 2020 through till 17th or 18th of May 2020. But since then, and it's 18 months, almost 17 months, we haven't seen even a single double-digit correction. And since 1992, I don't think we've seen a single uptrend which is so long and so powerful with no pullback. So obviously, it feels that the party can go on forever and there's nothing wrong. And to be certain, the top-down news in India is actually quite energizing and quite positive. But as you mentioned, I'm an old-timer, and when I look back at the trend that I've seen through 30 years of investing, it just seems unreal. And I think that there should be a correction. There will be a correction. When and how much, I don't know. But are things lining up to expect a correction? I think so. I think there are factors that are starting to worry me. So just to name a few, very early in my career, I was taught by a market veteran that markets are all about demand and supply, just like any other market. It's demand and supply for paper. And we've seen $9 billion of new IPOs already this year. We've probably got another $2.5 billion being raised in short order over the next 3.5 weeks. And every successful IPO, in my view, is encouraging more such offerings to come through. In terms of demand, if you look at the foreign flows, there is no incremental net new investment coming through for a couple of months now. Even the participation in IPOs is being funded from sales of existing positions, as it would seem. Local mutual funds are definitely seeing a huge amount of inflow from investors, but how much of that is coming into the market is a question mark, because the net purchase figures from mutual funds have also been fairly soft. So I think, the demand-supply equation is starting to get a little worrying, at least, the way I look at it. Second is that the earnings season so far isn't giving you a positive momentum to earnings revisions. So when P's are already high, you need earnings revisions to hold the market up. And that hasn't come through. Banks, of course, you're probably going to see some positive momentum and some positive revisions. Tech, a little bit, but outside of that, there's really nothing. So, if you think about it in terms of demand and supply, a correction looks potentially possible. And in terms of earnings momentum and valuations, a correction looks possible. We will have to see how and when it pans out and what's the event that triggers it. But these are the fundamental factors in my view, and the technical factors in my view, that one has to think about.